Most people don't lose money in crypto because the technology failed. They lose money because they make the same mistake over and over and over again. Hi, my name is Lamia, and in this video, I'm going to break down the 5 biggest mistakes retail investors keep making in crypto so you don't repeat them. Let's get into it. Mistake number 1, buying narratives late. Retail doesn't buy early. Retail buys when something is already trending, when everyone is talking about it, when the price already moved, when influencers say this is the future. But by then, smart money positions weeks ago, sometimes months ago. Crypto moves in cycles: narratives, hype, retail entry, distribution, correction. If you're entering at hype, your exit liquidity. The solution? Don't chase movement. Study structure. Watch where liquidity is rotating before it trends. Be early or don't be at all. Mistake number 2, no exit plan. Retail always talks about entry. Almost nobody talks about exit. They say, I'm long term, I believe in projects, I'll hold forever until price drops 40%, 50%, then panic starts. Here's the truth. If you don't define profit targets before you enter, emotions will decide for you later. Have a plan. At what percentage do you take profit? At what point are you wrong? If you don't answer that before buying, you're gambling. And mistake number 3, keeping everything on exchanges. This one is dangerous. Most people buy on centralized exchanges and just leave everything there because it's easy, because it's convenient. But remember, not your keys, not your crypto. Exchanges can freeze accounts, pause withdrawals, change rules. Convenience comes with counterparty risk. Learn self-custody, even if you start small, because crypto was built for ownership, not storage account. Mistake number 4, ignoring macro. Crypto does not move in isolation anymore. Interest rates matter, liquidity matters, stock market matters, ETF flows matters. Retail often thinks this project is strong, so price must go up. But markets don't move on belief. They move on liquidity. When liquidity expands, risk asset raises. When liquidity tightens, they struggle. Understanding macro doesn't make you a trader, it makes you aware, and awareness protects capital. Mistake number 5, following influencers blindly. This one hurts the most. Retail follows loud voices, big numbers, big predictions, big promises. But remember, influencers don't carry your risk, you do. Before buying anything, ask, do I understand this? Or am I copying someone else's conviction? There is nothing wrong with learning from others, but decisions must be yours. Otherwise, you panic when they panic, and you exit when they exit. That's not strategy, that's dependency. Crypto is powerful, but it rewards discipline, not emotions. The difference between retail and experienced investors is not intelligence, it's structure. Have a plan, understand liquidity, protect custody, control emotions, and importantly, don't rush, because in crypto, being early matters more than being loud. I hope this helped you think differently. If it did, like this video, subscribe, and share it with someone who needs to hear this. I'm Lamia, and I'll see you in the next one.